So there's like, 30 that I think that there's just a lot that entails getting into a startup. But my piece of advice would be stay balanced and don't let your highs get too high or your lows get too low.
Hey everyone, this is Devin Miller here with another episode of The Inventive Journey. I'm your host, Devin Miller, the serial entrepreneur that's grown several startups into 7 and 8 figure businesses, as well as the founder and CEO of Miller IP Law, where he helps startups and small businesses with their patents and trademarks. If you ever need help with yours, just go to strategymeeting.com, grab some time with us to chat, and we're always here to help. Now, today we've got another great guest on the podcast, Eric Baum, or Alec. I said Eric, Alec Baum. And Alec went to undergraduate in Philadelphia and also played baseball during college. And then started out as at an investment firm out of college. I think it was with Susquehanna. And after 4 years, went to a small family-owned office to do investing. Did that, and then did that for a year. Worked for a few other individuals, managing their investments, and then started his own business with a friend, which is what he's doing today. So, with that much as an introduction, welcome on the podcast, Alec.
Thanks, Devin. Appreciate you having me on.
Hey, excited to have you, and looking forward to a great conversation. So I just took a much longer journey and condensed into the 30-second version. So why don't we rewind and unpack a bit? Tell us a little bit how your journey got started doing undergraduate in Philadelphia.
Yeah, so I'm from Baltimore, but first really fell in love with Philadelphia when I came up to visit my brother who was here for a few years. So I kind of knew that I wanted to be in the area. And played baseball my whole life. So started playing baseball at LaSalle University, which is in like the northern part of the city. So did that for 4 years, studied finance while I was there, knew that I kind of wanted to do something in investments. And like you mentioned, started at Susquehanna right out of school. So really was there on a trading floor, had a number of different responsibilities there, but Susquehanna is really an options focused firm. So that's when I fell in love with options. And I kind of took that from Susquehanna, was at a couple different spots after, and then
So now maybe jumping into that just a bit more. So came out of Susquehanna. I'm not as deep into investing by any means as you are, but I assume, as far as I know, Susquehanna is a larger firm that has a bigger presence. Is that right?
Yeah, so they're one of the biggest derivatives trading firms in the world, and they do everything from kind of prop trading, market making. They trade all different types of products. They're kind of one of the bigger proprietary trading firms on Wall Street. So again, everything with kind of an options lens. And they teach things like poker theory, game theory. So it's a really unique way of going about it.
No, makes perfect sense. So now, how long were you at Susquehanna, and how long were you working for them?
So I was there for about 3.5 years. So yeah, a little bit shy of 4 years.
Oh, cool. So now you do that. You do it with Susquehanna. You're there for just under 4 years, and then I think as we talked, you decided to make the transition to a bit of a smaller office or a family office or something along those lines. But what kind of prompted the switch or the change between going from what would be a pretty big and having a large presence and reputation to going somewhere else?
Yeah, it was really the ability to make a bigger impact was number one, being a part of a smaller team. But really, at Susquehanna, they have a huge presence and they're a very well-oiled machine. And I was really interested in kind of going somewhere where I could be a part of a smaller team and have a bigger impact. And so the family office I went to after, kind of gave me that ability. It was a little bit different in terms of scope of investment. So where Susquehanna was focused on options, the family office was mostly focused on direct investing, venture capital type investing. There was a kind of a small options portfolio that we helped with, but the main focus there was kind of direct deals and early stage investing.
So now you say, okay, I'd like to go in a bit of different direction, have a little bit of more direct impact and some of the opportunities that go there. And so you went there, and how long were you with that firm, or how long did you take that option?
I was there for about 3 years as well.
Okay, so they're there for 3 years, and then as I believe I recall, after you were working with them, you kind of ventured out and kind of dipped your toe, so to speak, in an entrepreneur or doing your own thing, and worked with a few people, individuals managing their investments. Is that right?
Yeah, managing their portfolios, doing an individual portfolio management, and that was also for a family office structure. But that is what sort of led to optionality.
And what made you kind of pivot or go in that direction for the period of time?
It was really just kind of an interest in so I'd gotten a taste of it at the family office of kind of structuring portfolios and really wanted a little bit more of that kind of all-encompassing look at how to structure portfolios, like asset allocation, optimization, things like that, that I was super interested in.
So now it sounds like, and putting words in your mouth, but you can definitely or feel free to correct them, that it was almost a bit of a progression to figure out what you liked and kind of where you wanted to be positioned, where you started out at a large firm, got some good experience, and then incrementally kind of moved more towards where you're at today of with helping others, doing investing and helping other individuals. Is that right? Or kind of what it seems like that would be a bit of the common thread, is that gradual progression?
Yeah, no, it absolutely was a gradual progression. And to where we are today, like I would say there were kind of bits and pieces that I was able to take from every single place. Kind of coming back to options, that's what we're focused on now. But learning that at Susquehanna, taking some of the venture experience and early stage experience that I got at GMH after that, and then really kind of working with retail clients like I did at kind of the family office after that. So really able to combine a lot of the experiences that I had to then be able to utilize them to taking the leap and going off on my own.
So now let's dive into that just a little bit. So you're still kind of working for that family office, but helping a few individuals kind of more manage their portfolios and their investing. Now, what kind of led you to make that final leap to kind of doing your own thing? Was it, hey, I want to do something different, or I have the opportunity, or I have a great idea, or somebody approached me, or I got fired and laid off and nobody wanted to be, and I was forced to do it, or any or all of the above? Kind of what led to kind of making that final leap to doing the business that to led to where you're at today?
Yeah, so it really it's something I've always wanted to do. I've always been an entrepreneur at heart and wanted to do something entrepreneurial, but never really had the conviction around any idea or any direction that I wanted to go. So it was this was early days of the pandemic. It was like summer of 2020 when you saw that huge flood of retail entrance into the stock market and into the options market. And with my options background, I was, the one in my friend group that was getting calls and text messages about what's an option, how do I trade, which brokerage should I use, and really getting to see a lot of the frustration, not just with the trading process, but with the legacy trading platforms themselves. And so that was really when a light bulb went off for me that, hey, there's this really big gap to fill at the front end of the retail market, that people want to be involved with options. They want to jump right in. They want to do it, but they're not doing it in a risk managed way, or they're not doing it at all because of the barriers to entry. And so that was really the point for me where I really started to take actionable steps on interviewing people and doing customer discovery, and kind of outside of, because I was still employed at that time with my kind of full-time job. So really doing stuff outside of work to move the business along and really see if there was an opportunity there. And it just early 2021, it became abundantly clear to myself and our co-founder that we were at a point of either having to jump right in or really keep it as a side hustle. And so that was when we kind of just sat down and made the decision, like, let's go for it. And so that was when I moved full time to optionality.
So no, it makes sense. So you kind of, it sounds like you started out as, the side hustle, or kind of just doing it on the side, getting experience, see if you liked it, if you can make a business of it. And then you came to the conclusion, hey, yeah, there is an opportunity here. Now, as you get into that, and you dive over, and some people, they dive into doing the business full time and it takes off, and all it needed was a bit of gasoline. And other times people dive into it and find out, hey, this is a lot harder to do it as a full-time job than a side hustle, and everything in between. So kind of as you made that leap and jumped over, how did it go, or kind of how did it work out for you?
Yeah, I would say it was a little bit of both, right? Like, so we knew that the road to being in market and having a product where people are using it, that was a long road because we hadn't had the tech built out early 2021. We needed to get our broker dealer license to become registered with FINRA and the SEC. And we know that was 8 months to a year. So we knew that there was a lot of time, between that decision point and seeing how the product resonated in market. But, we were really excited that we continued to get really high feedback on testing and kind of some of the versions that we were able to produce to have people use. We were able to raise some investment dollars and people really liked the idea. And so we did get as much traction as we could within that time frame. But, it's a long time to sort of be in stealth mode on the sidelines, still like waiting to get in market. A year and a few months is what it was between when I quit my full-time job and when we actually were able to land in market. So it's definitely a long time to be like, waiting for something to hit the market.
No, awesome. So now you said you started that around 2020, is that right? 2021?
We had the idea summer 2020, and then I went full-time early 2021.
So that's giving you a year and a half, 2 years under the belt, so to speak. Walk us through kind of how has that gone so far, as was it or where's it at today? Kind of how's that progression gone? And is it have 50 employees and making money rain from the sky, or still building it up, still figuring it out, still pivoting or adjusting, or kind of catch us a little bit up as to where it's at today?
Yeah, money is not raining from the sky yet, but it's going really well. We're super happy with some of the feedback that we've gotten, some of the traction that we've made. It's definitely, it's not like a rocket ship to the moon, but I think it's gone as well as it could have. We've been growing every single month. We've been keeping really close with our customers and figuring out what works. And it's in a space like this that's super heavy regulated, and there are some larger incumbents. It's all about kind of working out what your positioning is and where your place is in the market, and then just taking off and running with that. So I feel really good about kind of the traction we've made and the work we've been able to do to date.
Awesome. No, that sounds great. And now maybe one follow-up question to that, which is, now that we've kind of reached the present day, if you're to look into the next 6 to 12 months, where do you see that headed, or kind of what's the plan for you guys?
Yeah, so it's all about kind of scaling and growing. So kind of the way that we went about the first 8 or so months in market is we really wanted to identify kind of that foundational aspect of the business. So make sure that the unit economics make sense, make sure people like the product and like the way that we're going about it. And really, from a ground floor perspective, understand and make sure that foundation is there, and then use that as a base to scale off of. So I feel like we're just now coming up on that point where we feel super good about that foundation. We have that kind of small hot fire of customers who are coming back, who love the product. And we know that we have something that's people are really excited about, and that has that kind of viral component with the unit economics that work. And so, we're going through a capital raise right now, and it's all about kind of hitting that capital raise and then using it to scale and really grow the business.
Awesome. Well, sounds like a good direction ahead, and a lot of opportunity yet to come. So that's awesome. So, well, now as we've reached the present day of your journey, and even looking a bit into the future, it's a great time to transition to the 2 questions I always ask towards the end of each episode. So we'll jump to those now. So the first question I always ask is, along your journey, what was the worst business decision you ever made, and what'd you learn from it?
Yeah, so I think worst business decision that we made was probably jumping into a partnership without truly being ready. And I won't name any names because it was just something that wasn't a good fit at the time. But it was right after we raised kind of a fresh capital round about a year ago, and we were really looking for help on kind of the marketing side. And I think we were just super excited about, it was a bigger firm, had a bigger name. We've seen some of the work that they have done with other companies. And so, we were just excited about that potential for us. But I think if we had, we took our time with the decision, but kind of in hindsight, it was just something that we weren't really ready for. And so it ended up being more expensive, both in terms of money, but also time that we spent on it. And really kind of, was a 2 to 3 month period for us where we didn't make a ton of progress, and we were outlaying a ton of cash. So I would say that was the worst business decision. And then what we learned from it was structuring contracts, making sure that there's always like a quick out is going to be helpful for us. And then always just maybe spending a little bit more time, not chasing shiny objects, but making sure we're really making the right decisions.
No, and those shiny objects sometimes are fun to chase, and they do catch your eye,
Mhm.
but sometimes you do it at the wrong time or you chase the wrong object, it can certainly be impactful. So certainly an easy mistake to make, but a good one to learn from. So now the second question I always ask is, if you're talking to somebody that's just getting into a startup or a small business, what would be the one piece of advice you'd give them?
Yeah. So there's like, 30 that I think that there's just a lot that entails getting into a startup. But my piece of advice would be stay balanced and don't let your highs get too high or your lows get too low. And there's a story that I'll just run through kind of the quick version, but it's the parable of the Chinese farmer. And it essentially goes like, so there's a farmer who has a horse, and one day that horse runs away. And the townspeople come to him and say, that's so, I'm so sorry that your horse ran away. It's terrible news. And the farmer shrugs his shoulders and says, maybe. The next day, the horse comes back with two of his buddies. And now the farmer has three horses. And the townspeople say, that's amazing. That's such good luck. And the farmer looks at them and says, maybe. And then the following day, his son falls off a horse and breaks his leg. And again, the townspeople come and say, oh, that's so terrible. I'm so sorry that happened. And again, the farmer says, maybe. And then in a week, the emperor declares a war on the neighboring town, and the son can't go because he's not able-bodied enough to fight. So again, the townspeople come by and say, that's such great news. You're so lucky that your son was saved. And the farmer just goes, maybe. And the point of the story, the moral of the story, is that we don't know how things are going to turn out. And even though on the surface things might look good or they might look bad, we ultimately just don't know. So not getting too attached to a feeling of success or a feeling of failure, but just taking things in stride and staying consistent, especially for startups, right? Where those peaks and valleys are huge on a daily basis, let alone a week to week or month to month. So yeah, just stay consistent and keep it in stride.
No, I think that's a great takeaway, and you do hit that with a lot of, I think, startups, and especially starts all businesses, but especially startups and small businesses, to where one week it feels like your success and everything's going great, and then you turn around the next day and feels like
Yeah.
everything's falling apart and everything's on fire and you're having to deal with problems. And so I think taking that in stride and taking it with that perspective is definitely a great piece of advice. So. Well, as we now wrap up the episode, if people want to reach out to you, they want to be a customer, they want to be a client, they want to be an employee, they want to be an investor, they want to be your next best friend, any or all of the above, what's the best way to reach out to you, contact you, find out more?
Yeah. So our website is www.optionalitytrading.com. You can also find us on Twitter at Optionality App. And then TikTok, we have also at Optionality App. Also have a LinkedIn, so you can find us there as well. But definitely, yeah, reach out if you're interested in using the app. You can kind of download it from any of those places.
Awesome. Well, I definitely encourage everybody to reach out, connect up with a great company, and if nothing else, make a new best friend. So with that, thank you again for coming on the podcast. It's been fun. It's been a pleasure. Now, for all of you, the listeners that are out there, if you have your own journey to share and you'd like to be a guest on the podcast, we'd love to have you. So let's go to inventiveguest.com. Glad to be on the show. A couple more things as listeners. Make sure to click share, subscribe, and leave us a review. Really helps us to share these journeys with even more startups and small businesses to help them along their journey to success. And on that note, if you ever need help along your journey with patents, trademarks, or anything else with your startup, your small business, just go to strategymeeting.com, grab some time with us to chat, and we're always here to help. Well, thank you again, Alec, for coming on the podcast, and wish the next leg of your journey even better than the last.
Thanks, Devin. Appreciate you having me on.